Hello, guys.
Okay, you hear me now? Let me know if you hear me now. I got the feedback about no voice. It should be okay now.
Yeah.
Yeah, it's okay. Thank you, Philip. Welcome, Philip. So
Hello,
once
Philip.
again, welcome, welcome everyone at this Sunday rabbit hole. I'm here with Chris, like every week, every Sunday.
Hello. How are you doing?
We start with the macro macroeconomics, geopolitics, and then I'm going for technical analysis. So, Chris, you can go ahead. Also, I want to hear some feedback about Chris' voice.
You hear me good now? Philip, can you verify at the chat, please? Everything okay with the voice?
Yes, I got the feedback. Voice is good,
Let's go.
so we can go ahead.
Yeah. So, as we all know, a lot of stuff going on with the war, etc. We are now at the 13th day of the war. And of course, we can get your feedback as we discussed from X. And also, it is very important for me to get updates from Truth Social about Trump's movements because he can post all day, talk all day about press conferences. Also, very nice tool, Truth Social, for us. Let's go. Let's see the calendar. Week we have the main event on Wednesday about the rate cut decision. We're going to talk about it, of course, more. Let's go day by day. Not much activity on Monday. We only got the Empire State Manufacturing Index, which is regarding New York uh, new buildings and permits. We got the home sales, which is another statistic on Tuesday that can affect, but it's a yellow folder, as you can see. And of course, on Wednesday, PPI and then the rate cut decision. We're going to talk about it, of course. Let's move on to Thursday. There are a lot of news, also unemployment claims. And Friday, there is not much activity. Let's focus more on Wednesday about the rate cut decision. The Fed Watch of CME is a very good tool. You can use it to count down the decision rate cut probability, which is now at 99.2%, that the cuts will remain unchanged, and 0.8 that we get something like a decrease, which is at no point to look at it. So that affected gold, of course. We saw this week decline around 5K. And this is also very good news to take from TradingView. There is that window over here. You can get your news also from here and compare it to sources. For example, my sources that the 10-year bond yields went up. Money moved to crypto. also to oil because of the war, and that led to gold going down. So, of course, they can buy it cheaper, also like silver, copper, and palladium. And of course, we had a lot of bankers and traders sorting and closing their positions because you know that is like a wave. We follow the big whales as they sell along. And compared to the rate cuts decision, led to the gold going lower for this week and stabilizing around 5K. And of course, we also have the war that is from day to day escalating. Keep watching the news at X and Truth Social for more. And right now, you can ask me later at the chat if there's any questions. I pass the ball to Kat for the technical analysis. Thank you.
Yeah, we're waiting for some questions. I got the feedback on the chat about the quality of the video. It's not good. I'm on my screen. It's not looking that bad, but yeah, probably you set the 720 not full HD, but we fix it next time. So my apologize for today.
It's on my full one,
Okay, okay.
as you can see here. Maybe there is some technical issues with the internet. I don't know. Sorry
Yeah,
about it.
maybe.
Yeah.
Okay.
At least I believe the sound was good. Yeah.
Let me know if you see the chart. Okay. So last week uh, we was playing it as accumulation due to our daily support in that zone. Let me clean it up. We got the daily support here, but it seems like not hold for upcoming week. To be honest, at the Friday, when we do a 4-hour break of structure here in that point, also we took out that week. That was pretty good. Looking very good for bullish. We also sweep that trap candle, that 1-hour trap candle. They sweep it here and start pulling back. I believe from the 1-hour side, we were here. We back to the fib level, back to the volume. They give us a pretty nice reaction. Also with the 1-hour break of structure here. But it didn't stick. They start to falling down. At the Friday, I was just observe 4-hour structure because I guess, hey, maybe we're going for the 4-hour fib level. Break of structure here. We put our fib going down into 4-hour fib level. They start to accumulating also with the break of structure on the 4-hour here, but it didn't stick. They print a 50-minute break of structure inside due to our rules. 2 time frames down, time frames from the MetaTrader, regular time frames for MetaTrader. So it's weekly, daily, 4-hour, 1 hour, 50 minutes, 5 minutes, and 1 minute. 2 time frame down from 4-hour structure is 1 hour and 50 minutes. We can see a 50-minute break of structure here, another 50-minute break of structure, but it didn't stick. They failed the high once again. I sent it on the Discord. I sent, I'm not trading at Friday. For me, it can be for our potential reversal zone, but we need to take out that high. They didn't do it, so I'm not pressing any buttons at the Friday. And then they start going down. Break down our zone, test it here on the 50 minutes. On the 50 minutes trap candle. And now the zone was here. They break it down, test it, and going down once again. So what now? I'm more bearish for upcoming week. I'm more bearish, to be honest, for upcoming week. And we have some targets. Yeah, that was our fib for the daily reversal zone. Until we are in that zone, there is a potential to going upside, but now I don't like it much because they fail. 1 time, 2 time rejection, and third time it's not looking super good for me. It's looking more bearish, to be honest. So potential targets can be here, that low. Potential target can be here. And final target for me is that weekly fib level. First target, second target, and third target. We see the targets on the yeah, there can be also targets here on that low. So potential for targets, yeah. When we have targets, let's go to the lower time frame to find entry. For our okay, that's not bad. Yeah, that's not bad. Have some zero inside. Let's see. Okay, we don't have a zero, but we have a value area high here on that blue line. That's the value area for the volume. So I'm looking to pull back into that zone. Print the one of our entry model, break of structure, or engulfing candle, engulfing volume, and continue downside. If we take out that highs, I'm gonna think about bullish once again. Until we trading below that highs, I'm pretty bearish for the next week. Yeah, I can see bulls now. Maybe only for the pullback. Like, let me look at the 4 hour. I can draw it like that. When we go into here, into that fib level, I believe it's not going to create a lower low. It's going to create higher low and push higher. So if that zone not hold for the bearish, maybe if they not print entry model, or if they print the entry model but at least fail, I'm gonna look into that zone for possible rejection to the downside. For the possible rejection to the downside, I will not playing sells here, but I have in mind that they can reject in that zone for the pullback, and then I will put my fibs and wait for the bullish setup. It can work, but for me only for the pullback. So that's my first scenario. Pulls back and trying to create a lower low. I will looking inside that box. If that box will be push up without any respect, I will looking to some pullback and play buys. Maybe I'm gonna call it on the Discord if we get there for the retracement. So for me, that's two possible scenarios. If we go there, I'm more bullish. If we go into that zone, if they print entry model inside that zone, I'm bearish. Yeah. Chris, you disconnect. You got DC. Okay, Chris got DC. Let me know if you hear me. We're gonna continue with off camera. Okay, cool. We got the trend line also here. They break it, test it once again. For bearish, it's look good. The bear side. You hear me? Yeah, it's good. Okay. Okay, Chris got DC. I can't set my camera here because it took me too much time. So we just skip it and I'm gonna talk without the camera. So once again, I'm looking to pull back here and another leg down, or if they go into that zone, I will looking for the retracement and buys up. First scenario, second scenario. Okay, let me know if there is some question about the gold. First is bearish for another leg down. Second is bullish. Oh, it's a bearish price. So first scenario is bearish for leg down, and second it's bearish retracement for continuation bullish to the upside. Let me know if this is clean for you, and let me know if there is some question. Maybe I'm gonna look at the oil. Oh man. Damn. What is this? Come on. Look at the candle size. It's just a 2 weeks. Yeah, they meet some rejection at the all-time highs. Yeah, I no, I don't know if it's all-time highs. I have the data only from 2020, but they rejected but the high. Volume is sick here. Yeah, oil looks like the want to continuation upside. It's looking like straight up from the open. Minimum to that fair value gap. Oil looks good for the open. 1 to 3 should be pretty clean. Stop below the trap candle. Open just after the market open, and targeting that 1 hour imbalance here. Let me check if there is some zeros. Wait. Yeah, there is some zeros. 30 minutes. There is some zeros. Even 1 to 4 for the oil. I like oil. Yeah, oil upside from me just after the open. And I have the question during the week how I set my TP, how I set my stop loss. So I put my stop loss always below the structure. There is a 5-minute structure. You can put it below that low, also below here. See the low, high, higher low. There is a high, higher low, higher high, higher low, because higher than this low, and it's going for another higher high. So I put my stop loss below the low. I put my target at the imbalance here. You can put your target maybe here. There is some high. There is imbalance. There is high. So you know it can be TP1, more than 1 to 1. There is TP4, 1 to 4, risk to reward, and there is almost 1 to 7. It's 1 to 6.5 final target. I prefer to play it into here. More about the entry, stop loss, and TPs, I will break down during the week when the market is live. Also, we have on our Discord vote about new idea of streaming. Will be nice if you put your vote here. Appreciate for it. And maybe at Tuesday we're gonna decide which days which day will be that Polish stream for beginners. Because I see there is 5 to 1. To be honest, it's 5 to 0. I'm just put that one to to make click easier for you. Uh, Christos Christos said on the chat he have internet crashed and got kicked out. Yeah, Chris, no problem. And Philip says it's clean. So 2 minutes for the question, and we are about to finish for today. I like more oil than gold for the market open. That's a potential setup for me for the oil. Stop below that lows. Target at the imbalance or at that week. That was some nice week, so we can trade above it. For me, that's the first target. Second target and final target is that high. I like more oil than gold. And gold, as we said, pulls back into that zone and looking for bearish move. If we're going to higher zone, for me, bearish move only for the retracement to take a bullish setup for the continuation upside. Okay, and at least if you choose option number 2, all that session will be in English, and we're gonna add one more for Polish with only beginner stuff in Monday, Friday, or Saturday. We're gonna do another vote about which day we're gonna do that stream. One of these 3 days. Let me put that on the Discord. And that's oil setup for market open. I will also drop it on the Discord. Okay, I see there is no question, so I believe everything is clean for you. On the description of the stream is the link for the Discord. I will send it on the chat. If you are still not on the Discord, you are welcome. Just click the link and join us. Okay, guys, sorry for any technical issue today. We're just starting, so we're gonna fix it in the future. Thank you for being here with me, guys, today, and see you at Tuesday stream and also on the Discord. On the Discord, I'm active pretty every time. Okay, have a great rest of the day and see you.